Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good day, how you going? Phil Tarrant, host of the Smart Property Investment Show. I hope you're well, enjoying getting back into the office after the break, and it feels so long ago. It's already middle of February and time flies, particularly in property. The Reserve Bank of Australia keeping it pedal down on interest rates. It's a really interesting environment. I think it's the most rapid growth or spike in interest rates in many, many decades. You've got property coming off upwards of 10-15% in a lot of different markets. So this is the natural cycle of real estate, so do not panic, but do be aware of your particular circumstances in it and your ability to continue to hold your properties, own properties, and potentially acquire new properties in this cycle. I know a lot of people are talking about really good buying opportunities now and into the future. A little bit outside of the scope of today's podcast. Today we're reconnecting with a guest from many, many years ago. And by many years ago, 6+ years ago, all the way back in October of 2016. I caught up with a much younger Simon Liu back then, who had finished up his job at Luna Park and was just embarking out as a buyer's agent in new business. He's done a lot since, but I've asked him to come back in the show. I just want to check in with his property portfolio, where he's at, what he's doing, the way he sees the world, and just have a good chinwag and reminisce of times when we were both a bit younger. Simon, how you going? Welcome back to the show.
Thank you, Phil. Great to be back. It's been a 6.5 year minute, so
yeah, it has been, right? Like, how quickly does that happen?
Yeah, definitely a lot has changed, personally, and on the property and the business front as well. So yeah, definitely excited to be back.
Yeah, we'll get into that. Do you think just generally has life been good for Simon? Do you feel like you've been lucky?
Yeah, luck, wouldn't be the beginning of it, to be honest. It's look, it's been a bit of a journey.
Yeah.
I've last time we spoke, I got to that point where I had accumulated enough properties to get me enough passive income to quit the day job, which was always been the dream. And then I, right when I was on this show, I started the buyer's agency. So we're still running that. Takes up most of my time, actually. We've expanded into as part of the process of doing the buyer's agency, we've expanded into managing properties. So we manage about 2,000 properties up in Brisbane. We've also branched into conveyancing, so kind of absorbing that part of the process. Not necessarily to, purely make more money or more profit or anything like that, but I think it's, over the years buying these properties, you realize it can start to fall apart, at the tail end of purchasing. So, it's more about controlling the whole process and being a little bit more accountable. So I think that's, part of the reason why we went down that path.
Yeah.
Personally, I've got two very young kids now. So
how old are the kids?
They're 5 and 1.
Oh.
1-year-old extremely cheeky, keeps us all up at night.
Good.
And yeah, the 5-year-old's just started kindy this year, so that's very exciting.
Yeah, it'll be the second week of kindy right now.
Yeah, it is.
How was that, dropping them off at the gate the first day?
Look, it was definitely emotional.
Yeah.
My wife, she shed a few tears, but very, very proud moment, for both of us, and seeing him just kind of grow from literally, nothing, through to someone who's now starting school. So,
it's good times though, and prioritizing those moments are absolutely key. And you can sort of get stuck into just working all the time and building a property portfolio and building this and building that. But how do you sort of keep aligned with the purpose of all of that? Is it just sort of family and life and that sort of stuff?
Yeah, look, to be honest, before I had the kids, it was more like my goals were, I guess you can say, more material. It was more about me. Do
you drive a fancy car and all that sort of stuff?
I do, but I won't shed much details about that here. But I'm into cars, so that's the other passion I've got.
I think we spoke about that last time.
Did we?
I think we did.
I've upgraded a couple of times.
Yeah, it must have. See, the thing is that sort of deep down, I think, like when I start chatting with someone, I go, I can remember conversations. And, yeah. Anyway,
all starts coming back.
It all starts coming back.
But yeah, I've learned to smell the roses a bit. It's not just all about chasing and growing and things like that. And, we've been doing this for about 7 years now. So, that's sort of taken its own path. But personally, my personal goals are now more about, just creating a really sort of secure financial future for the kids. Not necessarily like a massive inheritance or anything like that, but it's more like, not having to count dollars and cents and, school fees and all that kind of stuff that comes up. So it's more evolved around their happiness rather than my own. Yeah. So I think that's what you learn when you have kids.
Yeah, it's funny, a lot of people sort of, I speak to a lot of investors, Simon, they say, I want to build up a huge portfolio so I can pass it down as a generational asset and pass it down through my kids and stuff. Then you see other people just go, property is a huge enabler, pretty much what you're talking about there. It's a huge enabler to give utility to provide, a really good upbringing for your children. Like, you can good schools and being able to do stuff, saying yes to stuff rather than no to stuff. But the whole idea of just lumping them with this huge investment portfolio, which is, going to just generate them income for years to come. A lot of people go, I don't want to do that. I want to leave my kids nothing. I'll give them the best. I'll set them up as best as I can so they can go away and do that themselves. But, I'm going to sell it all and blow the lot. What's your views on that?
Look, it's hard. Like before I had kids, I was always telling myself, I'm not going to give them anything. They're going to, because that's kind of the way that I grew up. I didn't grow up disadvantaged or anything like that, but it was a very humble upbringing. And I think that kind of builds character to what you achieve later on in life. So, but it's hard when it's your own kids and, when you're out and they want the toy or they want the candy or whatever it is, you as a parent, you just want to ensure that they're happy. That's the main thing. So look, I think in the future though, when they grow up and probably less cute, I'll
be a bit harder.
Yeah, no, actually, it'll be a bit easier for me to say no to them. So, so I think in terms of generational wealth, which is what everyone talks about nowadays, like I think naturally there will be some that will be passed down. Yeah. But I'm going to enjoy myself as well while I'm here. So
you got to do it. Hence the reason why you got a car thing, right?
Exactly. Yeah.
How many cars you own?
Look, it's 3 cars. Yeah. They're sort of high-endish, cars that are very sort of track focused.
You don't race them. You race them, do you?
I don't race per se, but I do take them to track quite a lot. So
give it a go.
Yeah.
Out at Parklea?
Out at Eastern Creek.
Eastern Creek.
Yeah. And what used to be Wakefield, but that's in the process of going through some dramas at the moment.
Well, you got to have your fun as well. But that's good. So remember we spoke about what's your background? Where's your family from again, Simon?
Originally from Hong Kong.
You're from Hong Kong?
So we immigrated here like 1989. We kind of saw what was going to be coming in with the 97 handover from
They reckon it was a massive party, that 97 handover. I had some friends there at the time. And,
was it?
They were English, though.
Oh, right.
It's the last hurrah, right?
Right. Okay. So, no, I was too young for those parties. But yeah, no, I think... we anticipated that sort of, troubling times ahead and we came to Australia. It was, like I said, humble beginnings. My dad was actually working full time back in Hong Kong, so it was only me and my mum and my brother, and we didn't speak a word of English. And, just that kind of, I think all migrants, that come to Australia have that kind of initial struggle and that initial story.
But that's the story of Australia, right? In many ways,
absolutely.
And it's the reason why we're able to build the country that we've been able to.
Absolutely, so lucky to be here, to be honest, and grateful every day.
What do they reckon about sort of, I guess, your success? Are you the apple of your mum's eye? Coming out here and building this big portfolio and big business.
Look, I think she's probably more on the worried side.
Yeah, okay.
Like I'm actually quite conservative as an investor myself. I've instead of building 100 properties like you hear about quite a lot nowadays, I've focused a lot on reducing debt, which has in hindsight now was a pretty good decision. Now the interest rates are all kind of going up a little bit as well. But in terms of how my parents feel about it, I mean, obviously, I'm hoping they're proud. I don't know. It's one of those.
Don't talk about it.
Yeah. We don't really talk about it, honestly. Like it's just one of those families that you don't really discuss that type of stuff. And they ask me from time to time. Yeah. But I try and yeah, you know.
Don't worry, she'd probably secretly listen to this podcast.
Probably,
so,
yeah.
You know, she will do. And telling all her friends.
Yeah,
Right.
she might need a translator though.
Oh, it's cool. It's great to see you again, mate. And give me a sense for the portfolio now. It's probably grown a lot since we caught up 6 years ago. Tell me about it.
So last time I was here, I think I had about 10 or 11 properties, and now it's sitting at 24.
Yep.
You know, I've got about in terms of value, it's looking around about the 18 mil mark.
Okay.
Like I said before, I spent a lot of the past 2 years just reducing debt, increasing the passive income, and also, I've been just off the back of the businesses that we run that I've obviously done quite well. I've been buying a few properties here and there, not exactly the same ones that built up the initial portfolio. But the net passive income at the moment is around about the 700K mark a year. So
It's pretty good.
Yeah.
Pre-tax.
yeah.
Yeah.
Net after expenses, so
Okay.
before tax.
Yeah.
But
That's pretty good going.
oh, thank you.
Yeah.
But it's I've just never been the type of person that just wanted to just hoard, dozens and I've got quite a fair few, but for me, I always look at it as like a stage, a comfort zone type of thing.
Yeah.
That's actually what got me to quit my job, and consequently start these businesses and all that kind of stuff that I've done since then. And I think you can call it challenging yourself, but I think stepping outside your comfort zone has been really paramount to what has kind of led me to where I am. So instead of just accumulating more of these houses, which not only do I do every day for my clients, my buyers, and also potentially a bit of a conflict of interest as well, but also because I just want to move on to the next stage.
Yeah.
So recently I've taken a huge interest in luxury sort of lifestyle Airbnb type properties.
Is that what you've been buying?
Yeah. I've got 2 at the moment, but we're looking at a couple more very soon.
Where are they? Tell me about
They're on Lake Macquarie.
Okay.
Which is
great spot.
up the coast.
So towards the ocean side or out sort of around. Let me get my geography right. Sort of Morisset Way.
It's actually around there. So I bought in Bonnells Bay.
Yeah. Okay.
And also at Fishing Point.
Yep.
They're on the water with a jetty and all that kind of stuff. And I bought these. I would say about a year ago now.
Okay.
And then back then, I kind of noticed, if you know Lake Macquarie, the side towards Swansea is more like prestigious, right? And the side towards Toronto, Morisset, has always been considered like not as nice. But I found the price disparity between the two, like literally night and day.
Yeah.
And this was for the
what'd you pay for
waterfront
it?
stuff. So for the Fishing Point one, I only paid 1.1.
Okay, waterfront with a jetty.
Waterfront with a
deep,
jetty.
With deep water, you put a tinny out there at least.
Yeah,
right?
yeah.
Okay.
It's about like, I don't know, 3-4 meters, 5 meters deep,
you get
something like
something
that.
in there. Yeah.
And then Bonnells Bay was 1.2.
That's good buying.
Yeah. So I like even when we first spoke, I was always about buying, distressed, off market, that type of thing. So those were the ones that I really targeted, even for these
Do they still
lifestyle
exist
houses.
at that price point up there?
Yeah.
Yeah.
People get divorces. People lose their jobs. People go through
They sort of holiday
situations.
homes for people, really.
Yeah. I think there's a lot of the demographics is slightly older.
Yeah.
Around that part. So
They've really built out that area, like some really good restaurants. It's
Yeah.
really up and coming, and that's what's about probably 10, 15 k's from Morisset, probably closer.
Yeah, well, even out in Trinity Point, it's like a whole big marina thing out there.
Yeah.
They've got
It's a
really
fancy
nice
restaurant out there,
There is.
and Morisset is about to get a 25,000 seat outdoor stadium. You know about this?
There we go.
It's
No, I
crazy.
didn't.
Yeah. So do yourself a favour. Come
Yeah,
off
I
the
will.
motorway. The next time you go up there, it's on the right hand side.
Actually, I think I've seen that
yeah,
development 'cause
yeah.
I drive up there a lot.
Yeah, 25,000.
Wow.
So essentially, what they will be doing is, those big sort of Hunter Valley concerts where you go and see like Elton John and Big Badge and whatever.
Yeah,
It's all going to
yeah.
be based out of there now.
Yeah, right.
Purpose built, 25,000 seats. That's absolutely mind blowing. What's going
That's
up there?
insane.
They're going to build the biggest water park in the Southern Hemisphere around there. So like for Lake Macquarie, this is all good stuff.
Yeah, right.
Where you bought these things.
I must have
Good
sensed
stuff.
Spidey senses.
No, you got it. You got spider senses. But so you've changed. So you've changed your the type of stuff you're investing in. But you mentioned that you've sort of got net passive income sort of over $700K, right?
Yeah.
So on that basis, at $80 million
So
valuation, you've paid off a lot of debt, right? Because
Yeah.
that means that most of the income you generate goes into your back pocket rather than paying off mortgage debt.
correct, yes.
Yeah.
So 700K-ish net is kind of what goes in my bank at the end of the day before I pay taxes.
Yeah.
And it's been deliberate, honestly. Like, I paid off a lot. I put a lot of cash into sort of offset accounts along the way.
Yep.
And then as that passive income grew, I started, just organically offsetting more houses as I kept going.
So have you paid the debt down or it's offset?
Okay, so
Because I notice a lot of these investors where they sit there and they go, oh, I don't really want to pay the debt down, but I'll offset it so I'm only paying the interest on the amount rather than just putting a chunk of cash into the mortgage. That means you lost that money forever, right?
Yeah.
So it's something a lot about. I personally, I struggle with this as well, where I just go, oh, should I just get rid of the debt because then it increases my serviceability if I want to borrow more.
Yeah.
But I want to keep the money liquid so I can use it. So it's my own sort of financing line, right?
Look, my scenario is about 50-50.
Yeah.
So 50% of the portfolio that doesn't have any debt against it is fully offset, as in like just spare cash just sitting there offsetting these properties 100%, and the other ones I own outright.
Yeah, okay.
And the ones that I've owned outright really has been just
so there's no debt on them.
no debt on them.
Okay.
Yeah. And
so that's how it balances out, sort of,
Yeah.
What's the LVR then? So if you're considering the offset stuff as reducing the LVR, what sort of LVR would you be at?
It's below 30%.
Okay.
It's around. It changes.
Yeah. Hence the reason why you're generating 700 odd grand.
Yeah,
in passive
correct.
income. And no doubt you've been working pretty hard on your rents recently.
Look,
Competitive?
It's some are and some aren't. I've learned over the years that the extra $50, $40 you get a week sometimes is not worth a lot of drama that can come with that rental increase.
Yeah.
So, I've got tenants that have been in my properties for 10 years now, almost. So they pay the rent, they look after their house, and for me to charge them market rent off the bat is, especially after like a massive steep growth, like I wouldn't do it to myself. And I think I'm a huge advocate for what market rent is. Market rent is fair rent. At the end of the day, I always say if you're paying higher than market rent, you're unfair to the tenant. If you're paying below market rent, you're unfair to the landlord. But I think for me as well, it's not like I don't have like it's not at my portfolio is at a stage where it's not like every dollar counts. So for me, just to have a little bit less headache, a bit more peace of mind,
You can deal with that.
instead of doing $100 a week increase, I might go, look, this is what it is, $50, something like that.
Fuel's expensive, and driving a car around a track sort of guzzles juice, mate. You'd be able to sort of get a full tank on that and have some fun. But I get the philosophy, right? And it's important to look after your tenants. It's a two-way street. It's when it goes the other way, when your tenants aren't particularly nice and sort of put it against you. But whatever works for you.
Absolutely. And I think it's increasingly important nowadays with all the sort of the rental crisis, which is very real. People families can't afford average homes. And look, I mean, I've always been a proponent of like trying to make as much return as possible with property. But I think at the end of the day, landlords, especially landlords with a large portfolio of properties, do somewhat have a responsibility to be a little bit more caring and kind in certain situations as well. So
yeah. Okay, cool.
Yeah.
Simon, over the course of the break, I've gone into the 800 plus episodes of the Smart Property Investment Show on my Apple player and my mobile telephone here, and I found on the 4th of October 2018, 11 properties by 31. Now, let me read this. 11 properties by 31. Now I'm stuck. What next is the headline. A young investor who built an impressive portfolio in his early 30s is now in property jail, it says. He reveals the Smart Property Investment Show how he's overcome one of the biggest hurdles and what investors can learn from his struggles. Simon Liu opens up the Smart Property Investment Show about what he's done right, what he's done wrong, from buying the wrong properties to failing to get a pest and building inspection. The team also talks everything from cash flow and where and why they bought certain properties to using property to quit the rat race and how to add cheap distressed properties to your portfolios. All this and more. So that's what we spoke about there. I'm going to play a bit. I'm just going to play the start of it, and I haven't listened to this, so it's going to be a live. What do they call it? Reaction video, right?
Yeah,
hang on a second. Let's see how we go with this.
My eyes.
G'day everyone, welcome to the show. Phil Tarrant here. I'm the editor of Smart Property Investment.
Hang on, I'm double speed. No, it's full.
Good fun. They keep me. I guess if you tune into the program on
sound
a
like
regular
younger.
basis, we do it weekly. But you'll
do
all
sound
know that
different.
I am a property investor, avid property investor. I do like investing in property. I'm
Talk
very
too quickly.
fortunate as a journalist to be able to talk to people all day, every day, just see inside their property journey and essentially use their experience to help me frame the way I see the world and what I do as a property investor myself. So thanks everyone for all your comments and a lot of the feedback we get, both to myself as the editor at smartpropertyinvestment.com.au, but also
That email still
on
exists.
iTunes as well. So keep those reviews coming and let us know what you want to know. I'm joined today by Vivian Kelly, my regular co-host. Viv, how's it going?
Wow,
I'm excited
Vivian
to be
Kelly,
back.
back in the
It
day.
is good
I remember
to
her.
have you here. Property's interesting. If you do tune in
Let me
to
skip.
Margaret
I've got to
Loma's
find
show,
you.
Me, where people
my response is always and use
made a mistake
people can take away from.
Oh, here he is.
Oh, here I am.
I am. Yeah.
learning and still just trying to get the most out of
Here
this
we go.
wealth creation strategy.
Yeah, so I hope to pick Simon's brain, see what I can learn out of him. So, Simon, mate, welcome to the show.
Thanks, Phil. Thanks, Viv. Thank you for having me.
So, are you a long-time listener, first-time participant? Is that...
I am,
Yeah.
yes. Yeah, I do follow your podcast quite regularly. It's, really good advice for investors, whether they're just starting out or people who've even had a lot of experience. There's definitely something that a lot of people can take away from your show. So excited to be on.
That still
It's
resonates.
cool. It's good to have you here. A lot of people tune
Still
in.
is.
Like, it's a really popular show, and that's good. The property sort of flows through the veins of most Aussies, and everyone sort of understands the ability to create wealth through property. But how do you use... So you tune in, you listen to me droning on most of the time, but how do you use the information that you get from this podcast or anything really, whether you're reading magazines or websites and stuff. How do you use that
Property
information
magazines,
to
remember
influence
them?
the way that you think about your property portfolio?
API.
Well, look, I think one of the main things when, reading stories up on other people and what they've achieved and just, reading articles on where the next growth suburbs are or where each location in Australia is at in terms of property clocks and all that kind of stuff.
Property clock.
One of the
Still
main
believe
things
in a
for
property
me
clock?
is it
I
helps
don't know.
me
Haven't checked it
motivationally.
recently.
Because,
What time it
building
is.
a portfolio, property portfolio and owning properties and
All right, I'm going to fast forward to... Give me a timer.
Sorry?
I'm going to fast forward to 20 minutes. Here we go.
20 minutes? Okay.
Here we go.
And from the very first day I started the business through to today, I could show a bank a regular payment on the 30th or 31st of every, and that is, you're just doomed to fail. If you just want to, if you want to go out there and try and make as much money as possible and minimise your really good accountants who actually, will lend money to SME and that gets it. A lot of accountants don't get it.
Here we go.
They'll just try and
Maybe something.
minimise your tax rather than
net value of properties. And it was just a simple strategy of buying them, below market value, stripping the equity and using that equity along with some of the funds that you've saved yourself in your day job to go on to the next one and just creates a bit of a snowball effect.
So all your properties now are in sort of Logan Shire area in Brisbane, or are they all in Brisbane?
They're all in
I got a lot of
Queensland,
them.
yes,
They're in
except for
Queensland.
the West Ryde one that I'm currently living in.
Yeah.
right.
Okay.
I've got
That was a
one
long
in
time ago.
the Moreton Bay area, which is up
Very
north,
long time
and
ago.
the rest are scattered around Logan.
And what sort of stuff did you get in Logan? Is it sort of there's a lot of townhouses up there, but are they sort of freestanding or detached or?
Most of them are houses, so their own houses, their own block of land. I've got one townhouse up there, which was another mistake. That was the first property I bought
rid of it. Sold that,
up in
sold it,
Woodridge.
yeah.
So that was a lesson learnt. I mean, it's still viable as an investment. It's still cash flow positive, but it's just the body corporate fees for some of these townhouse complexes around that area can be quite high.
We're in Wood.
Don't do
was it
townhouses,
Woodridge, is it?
guys.
Woodridge, correct?
Don't
yeah.
touch them.
Don't touch
Yeah,
them.
yeah, I got a townhouse at Woodridge.
Yeah.
Which street?
Still got
are
it.
you on?
Nyanza Street.
Okay. Yeah, I'm on
Oh,
North Road
dude.
there.
North Road.
And it's very. There's a lot of stuff like that.
You still
up
got
there.
it?
Exactly.
Which is
does,
okay.
that does.
Yeah, they're good yielding
That has been a
properties.
great
I
investment.
haven't
Yeah.
seen
Okay.
the same level of capital growth on that property compared to other properties I have in
There you go.
Logan, which are
Still
freestanding
consistent.
houses. But
Yeah.
it's still been pretty good. But it's always the way with strata and other levies. It's another expense you need to cop.
Yeah.
But as long as you don't have problems in your other houses, if your house
Exactly,
goes wrong,
yeah.
when hot water system start breaking, or your plumbing stuff, or your electricity stuff,
Well, I think
or whatever.
I've done a story with Simon before, speaking of hot water, where he reckons he's replaced 20 hot water tanks in his time. So
It's a lot more now.
that was one of the
I
key
think I'm a
things that he
licensed
was
plumber
like,
without a
Right.
license. That guy sounds like he knows what he's talking about.
He does. I don't know what he's doing, mate. He's yeah. A lot of that is still so consistent, right?
Yeah, I mean, look, we haven't changed our, I guess, ethos or whatever you want to call it. At the end of the day, like, you know, there's so much things that have changed in the market since back in those days, and you know, I think property is, a lot of people overcomplicate it, you know, strategically, and you know, focus a lot on very sort of minuscule kind of data or changes and things, and that, I think at the end of the day, it's just really, you know, whatever you buy, whether it's in Sydney, Melbourne, Brisbane, Perth, it doesn't really matter. Like, just make sure you're getting a good deal. Don't ever overpay. Don't do brand new. You know, I know we talk about townhouses in that little snippet, but you know, I've always focused on land, because land goes up, buildings go down in value over time. You can control them, you can renovate them. Pick affordable housing areas. You know, like, when I was buying up, I remember back in the day buying all these houses in Logan. Everyone thought I was crazy, you know, and you know, because there was no growth. You know, there was no signs of growth. But I kind of knew, hold on, you know, these houses, they're 30Ks from Brizzy, for 250 grand. Really?
It's crazy. Remember those days?
Yeah, absolutely. It was insane. And I was like, I buy it for 250. It'll rent for 350. Happy days. Even at 6% rental, interest rates, but I was paying back then.
Back when interest rates were normal.
They were normal, yeah. And now it's ridiculous, right? Apparently, but yeah, you know, that cash flow was super important, because I was earning about 80K a year in my day job, so I needed every house to look after itself, for me to be able to hold on to them until they went up in value. So yeah, and just kept accumulating. You know, the whole purpose of buying bargains and buying good deals is so that you can use equity pretty quickly.
Yeah, and you still subscribe to that?
It's the biggest thing we do, honestly. Like, you know, we let's say get access to a lot of these sellers that are in genuine distress situations. We don't take advantage of them or anything like that.
Are people actually in distress situations these days? Because, you know, and I'll frame it, and I know some people do it tough and stuff happens, right? It's a podcast for property investment, so, you know, we've got to detach ourselves from that for the purpose of talking about making money through property, which some people have a problem with, but they don't typically tune into this podcast, so we've got friends, right?
Yeah.
COVID happened, family balance sheets were as strong as ever, people reined in their spending, interest rates were the lowest they ever have been.
Yeah.
It was pretty, outside of the health crisis, it was pretty good times for property investors, right? You didn't see a lot of distress stuff happening then, or did you, during COVID? Was there still this level of distress, or how prevalent is this notion of distress? And distress is like divorce or death or debt, or there's another D, I think something else. You know, do you see a lot of distress stuff, and why is it distressed? Well,
it's so many reasons, right? Everything you just talked about definitely applies to a lot of people. I think during COVID in particular, not everyone got lucky with, you know, the COVID payments and all the sort of government incentive and all that kind of stuff. So, you know, I think it was like, you know, a lot of people got it quite easy, or not difficult at least. But then at the same time, there was a lot of people doing it super tough. Yeah. You know, young families, you know, families on average or below average incomes. So, you know, and, you know, if I look back at the COVID payments, they were more sort of aimed towards the corporate sector, you know, like people that worked in retail and
they wanted, they was called job saver for a reason, right? They wanted people to keep their jobs, so they paid the corporate. Yeah, absolutely. So, you know, like I said, a lot of people did it tough. So, you know, it can happen. You know, it could be bankruptcies. It could be, you know, interestingly, we see some really left field stuff. Like, you know, it could be like a domestic violence case. Yeah. You know, a court order. And that's
that
horrible,
type of thing.
that sort of stuff, right?
And like,
I do know though, and if you're tuning into this and you're a business owner, they've introduced new 10 days leave for domestic and family violence, which is a really good initiative, I thought, to help people out in the workplace. But anyway, I digress.
Yeah, no, these situations arise, and the other thing as well, we buy a lot of properties where the property comes with a tenant, quite a long-term tenant, and it's difficult to sell a house that's tenanted. Especially in the markets that we operate in, which is mostly run by owner occupiers. Young families, people looking to buy houses to live in. So, a lot of the times the agents will call us and say, hey, we've got this situation. The guy's just lost his job. He and the property's tenanted. He needs to free up some funds. If you can get me this offer and take the house as is, with the tenant, we can get a deal done. So we go off and do the due diligence and make sure everything stacks up and all that kind of stuff as well. But yeah, these situations just really do come about. I think one other thing I wanted to mention is, this isn't like a generalization, but after doing this for several years, we've noticed a lot of agents. There's a myth that the agent works for the seller. I actually believe that a lot of agents out there work for themselves, because they get 2.5% of a sale.
Yeah.
And they've got two ways to go about it. You can go through the whole marketing campaign, 100 inspections, first home buyer, shaky contracts, that type of thing.
Hard work,
exactly. Or they can come to someone like me and say, hey, if we can get this deal happen, I can get. Sometimes they even sell the seller into taking a lower price. So.
But that's a good agent who understands the drivers of the vendor, right?
Yeah.
If they know, hey, the most important thing is that we shift this thing fast.
Yeah.
The last thing they want to do is some long protracted campaign, or,
That
you see these shows on TV like, Selling House or whatever it's called, where someone can't sell their house because it's a crap house, so they've got to spend all this money on to get the sale. Then normally the sale price is less than they bought it.
Yeah.
They're just at this level of distress. So, smart agents just go, what do you need? What's the most important thing? Is it price?
Yeah.
Is it speed, or is it conditions? And they go, if it's speed, they go, let me give Simon a call.
Yeah, absolutely.
And probably do it in front of them. Yeah, done.
Well, on the same phone call, I tell myself and my guys, we just say, get the contract, close it right now. Let's secure it. What do I need to do? What's the offer? What will they say yes to right now? So we kind of, in many ways, we also hustle the agents a bit. I think they love it.
That's what people pay you for, right?
Yeah, and I think they love it because they get 100 calls a day, surely. Oh, I'm looking at 1 John Street. What's the guide? What's the price? And then they got to go through. Oh, can I inspect it on Wednesday, and all this kind of just very standard stuff that they get. And then here I am saying, hey, John, what do you got? What do you got coming up?
Yeah, so you still buy a lot in Queensland, right? You're still pretty active up there.
Mostly Queensland and Perth now.
Yeah.
We're quite heavy in Perth. So.
The reason why I ask about that, because it's a trick of the trade for buyers agents that operate a lot in Queensland, and no doubt you and your guys do this, and I'm happy to share this, is that contract conditions in Queensland are different to New South Wales. So if you get a sniff of something good, no doubt you guys probably sign a lot of contracts, right?
Do,
just to control the property.
Absolutely.
You get 10 days, 10 days by memory? 10 days in Queensland. So essentially you sign it, means you can control it. Then you can do your pest and building inspection. Then you can put finance clauses in.
Yeah.
Or you can negotiate down on it. You can walk away. You just give a 0.25% deposit, and then you get it back if you walk away in 10 days. So the quicker you can control that contract, the agent's happy because they're just going to go, that's on a contract, don't worry about it. It doesn't have to take all those phone calls or do more inspections. If they're sure that the person on the other side is a genuine buyer. And as a buyer's agent, genuine buyer.
Yeah, absolutely. So, we sign, our clients sign these contracts, and, we put in like 14-day finance condition. In Queensland, you don't need to give a reason to terminate on the finance. And, we don't do it a lot. Obviously we're not buying, just securing contracts for the.
You don't want to piss the agent off because they're going to give you something. It's a 14 day. Sorry. You don't want to burn your bridges, right? You got to be a genuine buyer.
Well, we've burned a few bridges, but they always keep coming back for some reason. I don't know.
That's the reality of the market. So the question then is that through COVID, you probably weren't getting a lot of return phone calls, right? You're probably getting a lot more these days from agents looking to sell stuff.
Yeah, absolutely. Like right now, we're especially with rising interest rates as well, there are a lot of people looking to offload properties. Like I said, that could be tenanted, or maybe they are, let's say you're a mum and dad and you've got your house that the repayments are increasing because of the interest rates, and you need to offload an investment property. So we'll get the call, and if we can get it off market and at a genuine bargain, that's obviously what we're after. And coming back to what you said before about, I guess, the ethos of what we do, what I do back then and now, I still think genuinely the most important thing is to get bargains.
Yeah.
And
is there bargains out there now?
Absolutely, they're everywhere, all the time. There's just so many situations, and we're quite proud to say that over the years we've on average our clients pull out about 20% equity, usually within 6 to 12 months of buying.
Pretty good.
From the house, and that's partly because we buy them, off market, below market, that type of thing, but also because they're areas that are going through a bit of a gentrification or
you're getting
organic
both
growth.
sides, right?
Yeah,
you're buying
absolutely.
well in good growth locations.
Yeah, so we're getting kind of both sides of the pie, and then at the end of the day, that's how I built my portfolio. Buy them cheap, rent them out. Everything we buy, even today, especially the stuff in Perth at the moment, is still cash flow positive.
Yeah.
So, and just build that portfolio to a point where you've got 10 of them, sell down a few, pay off the other ones, and then you've got your $2,000 a week passive income.
Yeah. What's next? If look, we're going to catch up again before another 6 years, I hope. But let's fast forward 6 years.
6 years
from now, when we're listening to this.
It's a big question.
When we're listening to this on repeat, mate, what are we going to be talking about? You still going to be doing this?
Look, 6 years ago, I had no idea I'd be where I am at the moment. You just can't imagine. That's part of the journey.
Well, they always say you underestimate what you can achieve a day.
I think that's totally true.
Yeah, sorry, you overestimate what you achieve in a day. You underestimate what you can achieve in a year.
Yeah, and initial goal: quit my job, do nothing. Got bored, started HouseFinder.
How long did you do nothing for?
3 months.
What did you do when you were doing nothing?
Woke up at 10. Grab some lunch.
Yeah, it's bad.
Yeah,
it's bad for you, that stuff.
It's actually not, especially, I always say this as well, if you have what it takes mentally to actually achieve what people call financial freedom or early retirement,
you're not going to retire.
You can't.
No.
The amount of lessons that you learn to get there, the amount of resilience and the people you forge your relationships with means all you're thinking about is what's next.
Yeah.
And then
it's well put, that. Yeah.
And then for me, it was actually first time I got on this podcast, I had quite a few people reach out saying, hey, so, I heard you on the podcast, and I want to achieve the same thing. I want to get enough passive income so I can follow my own pursuits. So that's when I started HouseFinder, and that kind of organically did quite well because
because you're on the Smart Property Investment Show.
I was definitely on the show. That was about 80% of it. The other 20% was
80%. It was 80% me, 20% you. Is that what you're saying?
Yeah. 20% of it was us actually getting good
doing
deals.
all the work and stuff, and getting the deals and knowing what you were doing.
Making people money. That's it. Look, at the end of the day, it's that led me to the property management business. Met some great people there. We've for just over 4 years we've been running that business, and we've accumulated 2,000 rentals.
That's pretty good.
And from there but about a year and a bit ago we started the conveyancing firm. So we're kind of doing that stuff now. As we talked about, we bought a couple of luxury Airbnbs, and that was a personal, half personal, half investment thing, because I've got a young.
Do you ever use
kids.
the Airbnbs yourself?
That's the thing. So whenever there's a last minute cancellation on a weekend or whatever, we'll just take the kids up, and it's beautiful.
Does it feel like yours though when you're there? Because it's like Airbnb. You know what I mean? Do you feel like you're a guest, or do you feel like it's your place?
It feels like my place, because when you pay for everything,
it feels like your place.
It gets a bit personal.
There's a lot of upkeep on it. Is it a hassle, or is it you making money off them?
Yeah, absolutely. It's about 60-70 grand net a year.
That's right.
From that's after costs and things like that.
But who manages it for you? You got a special Airbnb
wife.
manager?
My
She
wife
manages
does
it,
it.
right?
Yeah, she does.
How do you go with getting cleaners and stuff? And have you got your own crew?
Look, okay, so
this is the big thing for people, right?
We'll go on an Airbnb tangent.
Yeah.
So a couple of things about Airbnbs that I've learned from these two. Number one, do it properly. Yeah, don't get the unit 5 streets away from the beach.
Yeah.
That's not going to be consistent. You need the wow factor.
Yeah.
When people go on holidays up the coast for 3 or 4 days, they don't mind spending $1,000 a night, especially if they're sharing it with, another family or another couple or whatever. Then if they can walk around and, take Instagram photos and, enjoy whatever's nice there. So, that's part of the reason why we specifically chose waterfront. So it's got that wow factor and it would continually have that appeal. Secondly, build really good relationships with the neighbors. Very good relationships. Like, they will make or break your Airbnb. If you have bad neighbors that aren't happy about, people staying every weekend and making a lot of noise, they're going to ruin their experience and you're going to get really bad reviews. And
How do you keep your neighbours sweet?
We actually involved them. So coming back to the cleaner bit, when we first bought A-Prop, the one at Fishing Point, we obviously talked to the neighbours and got to know them. And
before you bought it or after you bought it?
No, after we bought it.
Yeah.
And it turned out she was a cleaner.
Oh, okay.
So great.
So she cleans it for you?
Yeah, she cleans it for me, and we obviously pay her quite, I guess, above and beyond what she would normally get if she were to clean a house, because there's a lot more cleaning involved in an Airbnb. And she became our supplier for, like, she restocks everything inside the house, and if there's any dramas or whatever, she calls us and helps us organise trades. So kind of like a mini property manager.
Great.
It's in her best interest to do that. So obviously her and her family gets enjoyment out of it, but we're great friends now, to be honest.
Great.
She's got young kids as well, and they play whenever we go up. So
nice.
Neighbours are very, very important. And the neighbours thing isn't giving them a bottle of wine in Christmas. Right? Yeah, you have to build, like, genuine relationships. It can't just be all commercial. It can't be like, you're my worker now or anything like that. Like, really try and become friends with them. So that's another important tip. Upkeep, designing it well. Don't go to Salvos and buy secondhand couches and bookcases and things like that.
Deck it out proper. Did you furnish the whole thing from scratch?
We had to, yeah.
And, what'd you drop on that? How much you spent on furnishing?
Oh man, it was probably, it actually wasn't that much in terms of furnishing it. It was comparatively probably about $30,000-$40,000, something like that.
Yeah.
Including like the TVs and all the electronics. That's the expensive stuff. But we got a designer to do it, like a interior designer to theme it properly, give it a proper feel. And we picked her in particular because she would buy good looking furniture at a pretty low cost.
Yeah, okay.
Right? So that's why we didn't go over the top with marble tables and all this kind of stuff. So, and things break. Not couches, but chairs break, tables break, needs a lot of maintenance. So, just ensuring you have all those people.
Who does all the maintenance for you?
Well, this is another reason why. No,
handyman?
Definitely not me.
Yeah.
I can't pick up a hammer to save my life.
Yeah.
But my dad does it.
Oh, that's cool.
So he's kind of retired now, and he's really handy. He's the kind of guy that used to just do stuff all around the house every single day. So he goes up and he enjoys it. He loves it. Stays there overnight.
So he gets a nice holiday.
Yeah, gets a nice little overnight stay out of it, and he loves what he does. So that again brings a lot of enjoyment to me as well. Kind of giving a bit back to my parents.
I hope you're paying for it.
Oh yeah, I do. I get the Bunnings receipts.
Yeah, God, they shack up, don't they?
Yeah. And then finally, it's the marketing. You have to market these places.
Yeah.
It's no different to running a hotel, maybe not a hotel,
so
but
good copy, good pictures.
All that sort of good stuff. Pictures, Instagram. You gotta promote yourself, that type of things. And my wife does all of that. So she's been really great with it. And that's how you get repeats. That's how you get referrals.
A lot of repeats.
Yeah, we do.
Like people book it out like every year for. Well, that's the idea, right? Like Christmas. What do you get? You don't use it during peak times, right?
Never.
No.
Reserved purely for guests.
Yeah.
Peak times. You don't want to mess with.
What do you get a week during peek times for it? So like smack bang between Chrissy and New Year's.
Oh,
that's good money, I imagine.
Yeah, look, it'd be somewhere in the region. Like for the week, you might be looking at like $5-6 grand, something like that.
Pretty good.
So.
Can you swim off the jetty and stuff? And,
yeah. You can do the whole jump off thing. You can fish off it. We catch a lot of fish off there. You can, it just goes straight to the lake, which is huge. So, good
fun.
Yeah, so my goal is probably to pick up a few more of those.
Okay.
I think I'm really it's starting to become a bit of a passion project of ours. You know, I'd like to do a farm theme. I'd like to do like a tree house theme, maybe somewhere.
So you get like a farm type of Airbnb, would you?
Yeah, definitely.
Yeah.
You know, I think it's something that I've been quietly interested in. You know, maybe starting like a little bit of a hobby farm or something. I don't know.
Do it right. You do it right. Yeah, you make a few bucks out of it, right?
Yeah. I think there's, you know, people are after these sort of unique stays at the end of the day, and you know, having a theme to it's important. So the ones we got up in Lake Macquarie, one's called the Boathouse. Yeah. Because it's got like this boathouse at the bottom that's cool. You know, decked out like a proper boathouse. We've got the Lake House, which is like got the swans and stuff on the water in Bonnells Bay. If you know Bonnells Bay, it's like a little sort of pocket that goes all the way in. You know, so
look at that. You see what he's just done. Then he's still marketing. He's marketing. You're marketing him. Yeah,
there we go.
Can't help yourself, can you?
Instagram. The boathouse. The boathouse fishing point. Lake House, Bonnells Bay. But yeah, no, you know, probably want to pick up a one on the beach would be great. Yeah. You know, like a one in the bushes would be great. One in the like out in the
mixed
farm.
Bag. Yeah.
And just cool. Collect them. Maybe that's the next step of my
And that's
journey.
your holidays, right? Like when they're not there, you go and use it. Bam.
I mean, in theory, yes. Look, we use it a lot. I would say in like the first 6 to 8 months, the appeal does go. It does go. Yeah. But yeah, we've. I'm just too busy nowadays. You know, with young kids, it's so hard. Like 5-year-olds, birthday parties galore, right? Yeah. So yeah, that takes up most of my time now.
Driving around on Saturday, part of the party.
Yeah, exactly.
You get used to it.
Yeah.
It's good, Simon. Well, it's good to catch up, mate.
Yeah, no, thank you for having me.
I've enjoyed it. It's nice to reconnect. Next time we come on, we can start sort of getting a bit more strategic, I reckon. Let's talk about some...
Yeah.
But it's just nice to get a feel for where you're at. And
absolutely.
The way you see the world. And you know, the things are going well for you, mate. Like, that's cool.
Yeah.
It's really good.
So, I look forward to be back. I've, going to be... Plan is to be a lot more frequent on the show. So, yeah,
good.
Excited.
Mate, I'm sure we can have some good yarns. You got any questions? I wouldn't mean someone happy to chat about it. You can email the team editor at smartpropertyinvestment.com.au. Maybe we can do a Q&A type episode.
Yeah,
ask
for
Simon
sure.
Anything, you know.
I'll bring a few like clients in or something.
Yeah, maybe you can do
Talk
that.
About their journey.
Yeah, we like to do stories of people doing good stuff. But that's Simon Liu from HouseFinder back after 6 years. It just reminds me. I've got to work out exactly when the 10-year anniversary of this thing is. But I also want to find out the first time I mentioned COVID on this show. I'm going to have to get our research team to find that as well. See what I said about it way back when. Now that we're sort of pretty much 3 years, when the first the big thing for Australia when COVID hit was when they started blocking flights from international. That was when everyone went, oh, hang on, so here we go. So I'll track that down. Remember to check out smartpropertyinvestment.com.au. Heaps of other podcasts. Go and tune into it like this. Just having a bit of a yarn with people in property, in and around property. It's good to see Simon again. Smart Property HQ is where you find us on social media. See you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.